Gold and FDs. That is what I saw growing up. My mom did her post office investments diligently. My dad built his business and invested in properties. They were both brilliant with money, disciplined, safe, steady. But modern investing, that wasn't part of their world. And when my dad once tried stock trading through a broker, he lost money. That was my first brush with what not to do. So yes, I grew up believing gold is safe, FDs are dependable, and the stock market risky. But here is the truth I discovered. Safety alone doesn't create wealth. Myth versus reality. We've all heard it. Beta, gold is the safest. And yes, it is emotional. Indian households, mostly women, hold almost 25,000 tons of gold, about 11% of the world's gold. It represents love, weddings, security, identity. But over a lifetime, putting most of our money there keeps us stuck. Even the best wealth managers today say gold should be 10 to 15% of your investment portfolio, not half of it. Now, gold has long, flat stretches. I still remember looking at data from 2012 to 2019, gold barely moved, while the Sensex quietly kept compounding. History shows equity markets have compounded around 18% since 1979. That's the power of time and ownership. So, safety is important, but growth is equally essential. Now, why gold and FDs feel safe? I get it. Gold and FDs feel predictable. You can touch gold. You can see the FD receipt. It is like dal chawal, comfort food. But what happens if we only eat dal chawal all our life? Our portfolio gets comfort, not nutrition. FDs today give 6 to 7%. After tax and inflation, that's almost standing still. So to reach our bigger dreams, say buying a home, creating a retirement corpus, building a business, we need some superfoods in our money diet. Now my shift to modern investing. Now my father, he got me started on PPF and then FDs when I began working. It gave me a structure. But I soon realized that the returns were really low and my goals were big. My financial goals were really big. I wanted to buy my own property, build a business, create wealth that earns for me. Now PPF took 16 years to double. My dreams couldn't wait that long. So that's when my mentor, Mrs. Neeru Tiwari, entered my life. She taught me how long-term investing in good quality stocks creates generational wealth, not just gambling, but ownership. So I remember being reluctant at first because I had lost 90% of my capital in the 2008 crash. This was when I was dependent on a stockbroker. But Mrs. Neeru Tiwari, she taught me to learn, not to fear. So I studied companies, I built my portfolio. Most importantly, I stayed consistent. Initially, returns were slow. Then year by year, my money started to grow and by 10 years, it doubled. So that was my velocity moment. That's when I realized no one can build my wealth better than me. So why gold still has a place? Now, don't get me wrong. I still value gold deeply as an investment. When wars break out, gold shines. It's a hedge against volatility. But it is not my growth engine. It is my safety belt. So I keep around 10-15% of my assets in gold. In the past, I invested in sovereign gold bonds, now gold ETFs. So no making charges, no storage risk. Tradition upgraded. So now modern investing explained. Mutual funds via SIPs. Now this is your set and grow engine. You invest a fixed amount every month, just like you used to save monthly in, say, your gold kitty, 5,000 rupees a month for 10 years. At 12% return, you get 11.6 lakhs. At 7% like an FD, it is 8.6 lakhs. So same money, different future. Number two, index funds or ETFs. Now these let you own the market. So no stock picking stress you have. That's like low cost. There's a very, very low cost to index funds. So you capture India's growth story automatically. Bonds, now they add safety net and stability while keeping things modern and documented. Now I want to share a story of Pinky Saharan. So let me tell you about Pinky Saharan, an IT professional. She's in Bangalore, in our community. She joined Women on Wealth thinking that she was too late actually to start. All her life, she only knew about EPF, Employee Provident Fund, fixed deposits, gold. She kept doing that. And after learning with me, she opened her first mutual fund SIP, this time with full understanding. And today she's a confident investor, modern investor. She reviews her funds on her own, knows her goals, and she isn't dependent on anyone. And that's modern investing. Awareness, ownership, and action. So a gentle data-backed debunk. Now myth, gold is the best investment. Reality, gold protects but doesn't always grow. Myth, FDs are all I need. Reality, they preserve but don't multiply your money. Myth, equities are gambling. Reality, not if you invest in good quality funds, hand-picked stocks for 5 to 10 years plus. Gold and FD, foundation. Equity funds, growth. Together, they create a balance. So your 30-day upgrade plan, if you've only done gold and FDs till now, here is your gentle upgrade. Week 1, list your assets, your jewelry, your FDs, your cash. Week 2, start 1,000 rupee SIP in a index fund, balance fund, a good quality one. Week 3, replace part of new gold buying with say gold ETF. Week 4, set a money date every quarter. Increase your SIP by 500 rupees. Small systematic steps build big compounding over time. Your mother-in-law isn't wrong about gold safety. We are simply adding new ingredients so your financial thali has both comfort and nutrition. So if this video helped you see what to keep, gold FDs, and what to add, SIPs, index funds, good quality ones, save this video and share it with one woman who is still buying only jewelry. Let's honor our mother's wisdom and add modern wealth tools to it, because the best way to respect tradition is to evolve it.